It's about that time of day again. My name is Joseph. Wednesday evening, April 25th. Welcome back to your nightly newsletter. My plan this evening is to identify the most reliable trading opportunities setting up for Thursday's trading session. And I'm covering crude oil, S&P, Nasdaq, gold, and the euro. Starting off this evening, crude oil is bearish and range bound tonight. So my plan is to use the 2-try rule to focus on buyer failures up off the highs tomorrow morning. The S&P is bullish, but after pushing through the measured move, it looks like a short covering rally might be in play here for the Emini. So I'm looking to get a little bit more aggressive, finding a hidden channel for buying opportunities tomorrow morning as this market heads higher. Nasdaq, on the other end, is still bearish, range bound on the NQ, and I got my eyes on a key resistance level from the pendulum swing for tomorrow morning's trading opportunities. How about some gold? Gold is bearish with a strong move lower, but a recent bounce off monthly support levels tells me the sellers are rejecting lower prices, and my plan with rejection is to wait for selling opportunities at much higher prices, and I've got my eye on some key resistance levels on the yellow metal tomorrow morning. The euro is bearish with a spike and channel pattern, but a key support level tells me to avoid chasing this move lower and wait for more reliable selling opportunities up at resistance levels tomorrow morning. And we might see a little bit bigger bounce off that euro than first thought, so make sure you stay tuned for that chart later on in tonight's video. Speaking of charts, speaking of tonight's video, I got a great nightly newsletter in store for you guys and gals tonight. We got some trading ranges, some strong trends, might have to get a little bit more aggressive on that E-mini because of a short covering rally. I'm going to break it all down with you guys in 2 seconds. Before I jump in though, I want to remind you, if you're watching me on YouTube this evening, you can find a detailed description of this entire strategy written out on my blog here at Sideways Markets. I'll put the link in the description of that YouTube video if you want to come over here to the blog at Sideways Markets and read the entire thing. Also, if you have any questions about anything covered in this video tonight, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and be sure to hit the bell icon so you get notified every time I post another video. And if you really want to stay in tune with everything going on here at School of Trade, head over to the blog at sidewaysmarkets.com. This is where all the action happens every day, and make sure you join my mailing list. I'll send you an email every time I publish something new. You'll never miss a beat of everything we do here at SOT. Give me your name and your email address in the upper left-hand corner, right, and stay in tune with me all day. Also, don't forget, I'm always posting exclusive content on my social media channels. If you're on social, follow me on StockTwits, Twitter, Facebook, LinkedIn for important charts, links, and updates throughout the week. And don't forget about those charts for tonight's video. Speaking of charts, you can have all those charts from tonight's video ready, locked, and loaded for your trading day tomorrow. Even if you're not joining me in the trade room tomorrow morning, you can always benefit from those charts. There's a link below the video on the blog here at Sideways Markets. And then speaking of tomorrow's trade room, what are you waiting for? Grab that free pass. I have my free pass available for anyone who's not a member here at School of Trade. Come out and join me in the trade room as a guest. I got a free pass in the upper right-hand corner for you, where you can get a much deeper dive into everything we talk about here tonight on the newsletter. And again, any questions, any comments, any concerns, drop those suckers in the chat or in the comment section below the video. I look forward to answering questions, right, with whatever you have. All right, let's jump right in and get the introduction out of the way. What do we have tomorrow? Tomorrow, Thursday, April 26th. Now, of course, we are going into the end of the month of April. And as I mentioned at the beginning of this week, we've got one more day left next Monday. That's when it's going to be really interesting with the end of the month being on the first day of the week. The most important thing right now, though, is I do expect there to be an uptick in volatility over the next Thursday, Friday, and Monday session. So please be aware of that. I also discussed this earlier this week. Tomorrow is really where we get all the big news. We've got durable goods, international trade, jobless claims, all of those big red star news events are packed into tomorrow morning at 8:30 a.m. Eastern time. So that should be a good shot in the arm, if you will, to get these markets moving pretty well here just after we open up our trade room at 8 o'clock Eastern time. So keep an eye on those news events here for tomorrow. Tomorrow is a big news day, but it's all crammed into that 8:30 a.m. Eastern time block. So get at it early. I expect to see some great opportunities tomorrow in the wake of those big news reports coming out at 8:30 Eastern time. On top of that, that's all we pretty much have to work with tomorrow, right? Not much else on the schedule. So obviously, we'll be locked and loaded tomorrow, 8 o'clock Eastern time in our trade room. Looking forward to that news coming out at 8:30, and then we'll trade the reaction together with all of our advanced members. All right, let's jump into our charts here, and let's get this plan put together here for Thursday's session. I can't believe this week is starting to head into the last part of the week here already. This has flown right by. Starting off tonight on crude oil, crude is range bound and trying to complete the pendulum swing up into the battle zone, where I assume there will be plenty of sellers waiting to get short with a target going back down to that low tomorrow morning. Now, my plan is to focus on buyer failures for selling opportunities up around that battle zone resistance area overhead. Now, there are quite a few pieces to this puzzle tonight. Let me go through these one by one. First of all, we have a bearish move lower, right, in yesterday's session. That, of course, tells me now that until the bulls can show me some proof going higher here, right, this market remains in the hands of the bears. On top of that, we have a trading range. And we talked about this last night on the newsletter. If we saw a double bottom off of that low, we then knew to sell the high, sell the high, sell the high. As you can see, the sellers have been pretty active today, selling off the high of that trading range. So if you watched last night's newsletter and you identified that trading range, excellent work, right? You're ready to sell and hopefully earn a great profit off of that high. So now we have a trading range environment with a bearish bias to it. I want to sell off the high of that range. Then we have another big clue, and that is right below the low of the range, right? The largest part of that range low. You'll notice I've drawn a little rectangle over it. If you measure the amount of the break below the range, you can also project that amount above the range, and that becomes a key level of resistance. Now, I call this the pendulum swing, right? And really, the reason why I kind of call it the pendulum is because when a market is range bound, there's a balance right in the middle of that range, right? That's why it's range bound, because the buyers are buying low, the sellers are selling high. Obviously, a little bit more of a bear bias to it, but the reality is the market is balanced overall. So when a market shifts underneath that range, right, that balance area is still there, and the price will snap back in the opposite direction. Right, and that's why I mark up on the opposite side. So imagine now there's a pendulum or kind of a balance area right in the middle. The amount of the move lower, right, will usually be the amount of the move higher. Right now, obviously not going to be tick by tick there, right? But this area up top here now, up around this 68.30, 68.34 area is a really interesting area for a level of resistance. Okay, so that's the most important clue. Well, maybe not the most important clue. Most important clue is right now is the range, and that range obviously telling me to then look for that pendulum swing, knowing that we have a bear bias, right? I want to be a seller off of that high. So where do we go from here? Well, I want to be a seller. The bears have the edge. So I want to be a seller, and I want to sell up at levels of resistance, right? That's the key, right? Once you know who has control, in this case the bears do, now find levels of resistance, and then once we get to resistance, then we can look for specific entry patterns, right? So as I always say, find out who has control. In this case, it's the bears. Then, right? Find support or resistance, right? In this case, we want to find resistance because it's a bear market. And then once we get to the level of resistance, right, then find the entry pattern. Right now, I'm going to go over those entry patterns as best as I can here this afternoon, but unfortunately, I don't have enough time to go over all the different patterns that we use in our trade room. If you want a much deeper dive into all the entry patterns, I'm going to drop a link up here in the upper right-hand corner to welcome you to take my free trading course on my website at schooloftrade.com. I'm going to find all the support and resistance levels here tonight, but tomorrow morning we're going to use the entry patterns to get into our trades. If you want a deeper dive without joining me in the trade room tomorrow, make sure you grab that free trading course in the upper right-hand corner. Look for the information icon right in the upper right-hand corner. Register for the free class. I'll send you an email right with a link to a video where you can learn all about the entry patterns that we're going to be using tomorrow in our trade room, right? So don't delay. Pause the video if you need to. Grab that free class. Get that registered. That way you're ready to learn those entry patterns, right, as we go through the rest of tonight's video. So we know we're bearish. I want to sell at resistance. Where's my resistance levels? Well, I have a measured move, one leg, two leg, right? Measured move, that's resistance. I also have a rising support trend line, which I'm going to poke up top here, right, and create resistance there, right? There's resistance. I also have the pendulum swing. That's a level of resistance. And don't forget about those prior swings, right, for traps above that 34 area. That is a level of resistance as well. So as you can see, quite a bit of resistance up here, right, around that measured move. And that means that's exactly where I want to look for those selling opportunities tomorrow. We have a pretty strong move higher, back to the high of that range. Pull back here. I will not be surprised if these buyers try to run this move up, right, as they try to run this market up. I'm looking for buyer failures, right? Buyer failures look like the letter M. Up, and then down, right? You can see that letter M, right? Up, down, right? That is one of our many patterns here. Once I have that, then I can find the pullback to the moving average. Pullback patterns are pretty easy. I have a bunch of variations of pullback patterns we use in our trade room. So again, make sure you use, right, grab that free trading class in the upper right-hand corner. That way you can learn all the patterns. So we have that resistance level here overhead. I'm looking for a buyer failure off of that high, back below that moving average on strength, and then of course using that pullback to the moving average, right, to drop it back in down to that low. Now here's something else to consider, right? What if we don't end up going higher here, right? You might be looking at this going, wait a second, Joe, one try, two try, right? Couldn't we sell, right? Couldn't this be a failure right now? It absolutely can be a failure. But here is the challenge with a failure at this level. What do you see waiting below? Yeah, rising support trend line. So I'm not going to say we can't look for a sell there, but typically what happens is when you're forced to sell into a level of support is it will usually kick back. And when it kicks back, that's where I'm looking for a trap pattern. Again, you'll learn all these entry patterns in that free trading class in the upper right-hand corner, right? Click the little letter I in the upper right-hand corner. That will bring you to the free trading class, right? That will be my trap, right, if we do head lower, right? So if we head lower, beware selling into that rising support trend line. Look for that trap up above the high of that range, and that will finish the move down. Now, as we go back down to that low, the market is bearish, but keep an eye out for a one try, two try rule, two tries for those bears, and then buying opportunities going back up into that range. This will take a little bit of patience because you're going to want to make sure you let the sellers really prove that they can't get through that battle zone down there. And if they can't get through it, I'll then look for, again, what I call the two-try rule into seller failure, right? You'll learn all about that stuff, right, in that free trading course in the upper right-hand corner or on the homepage of our website, right? So two-try rule, buying off the low, back up into that range tomorrow. So now we've got the sellers covered and the buyers covered around this range. How do we break out? What would a breakout look like? Well, we always know there are three things we look for when it comes to a trend reversal. This also applies to the 2-try rule in a trading range. For example, I look for strength. Then I look for a pullback. Then I look for strength. Basically, I look for a 2-legged move. Strength, pullback, strength. So if we see a strong move higher here now, I can now look at that now as a successful breakout. But here's the important part. Don't chase after that move. I'm going to draw a new trend line up at that high, find that trend line off the low, and then try to use what will probably be this support level, right, as support for buying opportunities going back up to retest the high. Remember, the key word here is strength, right? They've got to show me some significant strength going higher here, because remember, when the bears have control, it's up to the buyers to rip the control out of their possession and take it for themselves. Target is back up to that 69.39 area, right? And of course, we get a prior level there overhead at 55 as a big target. So sell those highs, buy those lows, wait for the proper breakout signal. And again, I've covered a lot in this first chart here tonight to learn more about the entry patterns and a much deeper dive, right? Grab that information icon in the upper right-hand corner and grab that free trading class for a deeper dive. Let's keep going. Over now to the S&P 500 over on the ES. Over on the ES here tonight, give me 1 second here. S&P is bullish and headed back to that range where this week began. This channel will provide the resistance and support levels, right, that buyers need for getting into trades, right, and of course taking targets. But you know what though? There's a big clue on this chart right now, and it's the measured move. The measured move, you'll notice, didn't even stop the buyers from buying the low of that channel. You know, usually when we get to a measured move, usually we see a 2-legged deep pullback and then a buy back up. You'll notice though, they got the measured move, right? But look at that, they pulled back and bought right into it again. So something's on the rise here. This tells me the bulls may be looking for a much steeper channel. This tells me that with this big move down earlier this week, we may be in store for, right, what is called a short covering rally. A short covering rally is pretty simple, right? Earlier on in the week, the market tumbles lower, right? Everyone's trying to short the heck out of this market right now. If we start going higher here aggressively, anyone who is still short this market is going to have to get out, and when sellers get out, they become buyers. Oftentimes that produces a very aggressive move going higher. So what I'm doing is, my plan is to find buying opportunities off the low of a channel. But if we push through the top of this channel though, as we talked about in last night's newsletter, it might be important, right, to look for a more aggressive opportunity. In fact, look at the candlestick right here. Look at that final candle, right? Final candle of the day closes right at the daily's highs. It's a red candle, but it's a big wick at the bottom of it. So there was definitely profit taking at the closing bell, but there wasn't that much profit taking, right? Because you can easily see, right, buyers were waiting, right, to buy the end of that move. So here's what I want to do. Why don't we get rid of, obviously we got the major channel here, right? This is the major channel. Okay, that's easy. Okay, but you'll notice though, it's not a real steep channel, right? Obviously, we want to buy off the low of that channel. That'll be where I want to be a buyer here if we rotate back down to the low of that channel. But this could get a little bit more aggressive. Let's move this a little bit lower here. And what I've done is I've projected for us what I call, right, my bull target zone. So because we've blown right through that measured move, I'm expecting buyers to be hunting for this 26.55, 26.56 area waiting overhead. If that's the case now, let's just, again, I'm kind of anticipating this, so kind of bear with me here right now. But basically, if we end up rising higher here, pulling back, I'm going to now take that high, connect that high, anchor it to that low, right? And then that becomes a much steeper channel. Okay, so you see why this is important right now? Because if we have a short covering rally that kicks into gear, and if you're trying to wait for price to pull back to that major channel, right? If you're waiting for price to pull all the way back to that trend line, you might be waiting all day tomorrow. We may not see that deep of a pullback, right? If the bears start exiting quickly, the market won't pull back at all. It'll just run higher. So watch the overnight, because if we do get that strong run higher here, right, now we may have, and again, I'm kind of anticipating this channel right now, but I'll have to wait and see where we go for the channel. I'm looking for a buy right off of that low. All right, so those are the key principles here for tomorrow. So obviously I want to be a buyer, right? If we pull back off that high, I'm going to wait to get back to a level of support. The buyers have control, so what do? We look for a level of support. Then once we get to support, what's next? We find a pattern. So I'm going to give you guys the support and resistance levels. If you want to learn all the patterns, again, grab that free course up in the upper right-hand corner. That way, right, you can get a deeper dive into those patterns. In a bull market, when we go below the moving average, you're looking for what looks like the letter W. Down, and then up. That will usually be below the moving average, right? So we come below the moving average. The sellers will try to sell that pullback, right? When they fail, that unlocks our first buying opportunity going higher. Now, that's not all. We can then look for a pullback to the moving average, right? And then complete the mission, right, off the pullback to the moving average. So seller failure after we get below the moving average, coming off that trend line support, and then buying on the way higher there, right? So that's pretty easy there for tomorrow. But again, now, right, if we do go even higher here tomorrow, let's adjust this a little bit higher there, right? If we do go, and again, I don't know if this channel will be correct or not. It all depends on how high this market goes. But if we do see this thing now, right, start to jump higher here on us, then I know I want to go out and draw up a new channel off that high, up off that low, right? And again, bear with me. I can't see the future, but I can anticipate it, right? And then I'm looking for that pullback from there, seller failure into strength, right? Into pullback and up from there, right? So these are some scenarios I'm watching here for tomorrow. So that's if price pulls back, right? And of course, if price goes higher. What if we end up going sideways here? What if we end up doing this? We run higher, we pull back, right, and then we double top at the high. We've seen a lot of these lately on all these markets. If you see a double top, right, in a bull market, that tells you look at the deepest point between the two tops. That marks up your range, and now all you need is a two-try seller failure off of that low, or a successful breakout pullback pattern. Again, I've got my own little special variation of the breakout pullback pattern, right, using the moving average above that high. And then, of course, I like to use the two-try rule, right, to buy below the low of that range. So that's if the price goes sideways tomorrow. So now you've got a plan if price goes up, price goes down, or if price goes sideways. Last but not least, how do we turn bearish? What would a reversal look like? Remember those three things? Strength, pullback, strength. First, strong move down. Next, next, pullback to the moving average, strong move down. Next, pullback to the moving average. Now remember, at this point now, this could just be a head fake. This could easily be a failure and then right back up, right? One of my favorite ways to trade a trending market is to get below the moving average, look for sellers to try. When they fail, you can buy it right back up, right? It's a really great pattern which you'll learn in that free trading class. If they hold that pullback, though, on strength, now that becomes a new bear channel. And that new bear channel, we can now look to leverage that new channel and sell up at levels of resistance right there tomorrow. Hopefully that makes sense. If you need any clarification on this, drop some comments below the YouTube video, right? Or you can always call me in the office, and I'd be happy to welcome you aboard, right, as a brand new client, and we can do it together tomorrow in the trade room. We have to assume the buyers are trying to get up to that trading range that began the week this week. And we have to assume the sellers are trying to get back down to retest that low. All we need to do now is wait for the opening bell and see what we get here as far as, do we continue pushing higher or do we pull back off of these highs? Only time will tell, but at least now I have a good plan for it. Let's keep going. How about some Nasdaq? Now the Nasdaq looks kind of like the S&P, right? Struggle to go lower, breaking higher here right now. But the Nasdaq is very different in the most important way. It's range bound and trying to complete the pendulum swing up above the range highs, where we can safely assume there'll be plenty of sellers eagerly waiting for selling opportunities, right, to send this price back down to retest that low. The most important piece of this puzzle will be waiting to see how the buyers react to this next pullback to the moving average. If the buyers fail on the next pullback to the moving average, I'm looking with the 2-try rule to sell back down to that low. Right? But if they hold, I'm looking for a hidden channel and buying opportunities back up to retest yesterday's high. As you can see, as the market opens up in Asia, as electronic markets open, you can see automatically we have a gap up. Now that gap up could be a sign of things to come for a possible short covering rally. Remember, we can see here strong move down in yesterday's session. Right? I mentioned last night, if we start seeing double bottoms here, then we know it's a trading range, right? And you want to sell off the high, sell off the high, sell off the high. At the same time, we have that same pendulum swing below that low and then up above that high. As you can see right now, we are right up in that pendulum swing territory, which means it's go time, right? It's go time here for these buyers. But again, with this momentum moving higher here right now, I want to see what it looks like on that next pullback. This could be nothing more, right, than a 50% move, right, off of that big move down, and we could find ourselves right back down into that range, right, tomorrow morning. So the bears have short-term control right now. This looks pretty fun, right? This looks pretty good, but I want to see what it does, right, when it pulls back, right? As these buyers lose momentum at the beginning of, right, this session, it will likely pull back and fill that price action gap. When it pulls back to fill that price action gap, do we hold that pullback or do we fail? If we fail, I'm looking for that 1-try, 2-try, right? 1-try up, 2-try up. If they fail, we're looking for that failure into strength, strength into pullback, and pullback back down to retest that low. Failure into strength, strength into pullback, and again, we'll get that moving average, right, coming over for the sell off of that high. Again, I'm kind of glossing over these patterns right now. If you want a deeper dive, grab that free trading class in the upper right-hand corner of this video, right, and I'll see you in a much deeper dive, right, into that classroom session. Now, from there now, right, if they hold this pullback, this is where things get interesting. If they hold this pullback now and we run higher, now I can go out, find a new channel off of those highs, bring it up off of this low, right, and start looking for buying patterns off of that low. Right? So it looks pretty good for the buyers right now, but again, let's make them prove it. Let's see if they can prove that they want to hold on to this sucker, because again, we're above the top of that range. So again, 2 opportunities here right now. One for the bears is a failure off the 2-try rule, strength and a pullback back down. Or if we do hold the next pullback and explode higher, I'm going to grab that new channel. I'm not going to chase after it. Grab that new channel, bring it up off that low, look for that buy off of that low, right? And again, if this really gets crazy, right, if it really gets crazy and goes higher here, don't chase after it. Find a steeper channel, wait for that pullback, right? It will pull back. It almost always does. Every once in a while, you see a market that just gets completely out of control on a short covering rally, because that's what it is, right? The bears had control yesterday, right? They couldn't get it down to that prior month low. If the bears give up on this, all of them become buyers, and the market will aggressively push higher. So that's what you want to be watching for tomorrow, right, on that Nasdaq. And the target for the bulls is back up to that 67.17, right? right? Basically where we came. The sellers, however, though, they have the edge right now. So watch that 2-try rule. The bears have a target going all the way back down to retest that low. And because they just barely missed that prior month low before, I would imagine if we do get back down there tomorrow, I would imagine that's where we're going to head, back down to that prior month low. So really good example there of another pendulum swing right here on the Nasdaq. And again, that momentum kind of shifting back and forth, right? That balance area, momentum shifts down, right? It shifts back up. We got a bit of an overshoot there to it. But again, let's see how they look right on that next pullback. All right, let's keep going here. Now, probably the most difficult chart of the session tonight is the yellow metal. Gold is bearish with a strong channel moving lower, but this prior month low appears to have held as major support. That tells me that sellers definitely have control right now. We haven't seen enough to call this a bull market right now, but we're clearly rejecting lower prices and will most likely be waiting to get short at higher prices tomorrow morning. The key tonight is this rising support trend line, which tells me that sellers will try to avoid selling into that support trend line, and they'll try to get as far above that trend line or below the trend line as possible for reliable selling opportunities. Now, there's quite a bit on this chart right now. What I want to do, though, is I want to show you a little bit bigger picture here, because I think this will give you a little more clarity on this. Here's a 30-minute chart of gold. No, I do not trade a 30-minute chart. I'm a short-term day trader. The futures markets were ultimately built for short-term trading with leverage, great liquidity, and great volatility. And when you consider rollover, right, futures just weren't made to be bought and held, right, or sold and held. They were meant to be traded, and that's why I use a faster time frame. If you want to trade a market like gold on a slower time frame, I would recommend you use an ETF market, right? Like a GLD or an NUG, right? All of those are a dust, right? All those ETF markets, they'll have, right, continuous contracts or shares, if you will, and you can trade a longer term time frame using ETFs. Futures were never meant to be traded on a longer term time frame. They're meant to be traded, right? Great leverage, great tax advantages here in the US, great liquidity, right? And of course, right, many other benefits really that make it a day trader's market. What I want to show you though is that we have a long-term, right, bear market going lower, right? With that bear channel going lower. Well, you know, anytime we have a strong move in one direction, we expect to see that two-legged move and a retest of that low. You'll notice now where we are. We're sitting right around that low. That's a big clue. That basically tells me that the sellers definitely have control, but this is almost like a double bottom. It's not a double bottom yet, but it's almost like a double bottom, right? And anytime we have, right, a strong move down that double bottoms like this, what do? We look for that to be the range high, and then we try to sell, right, up above that range high. Right? That's the idea behind a double bottom, right? It becomes a range. We've talked about this, right? Okay, now, if it goes a little bit lower though, right? Let's just say we go a little bit lower here, right? If we go a little bit lower there, but we don't just run lower, now what I can do is take that low, connect to that high, and create kind of like a spike in channel, right? And now I know I can sell up around that high, right? So I just want to show you this on a bigger picture, right? Because you can easily see, right? We're obviously bearish. There's no question about that. But again, it's where we finish this move. Right? Now, I might be wrong on this, right? They may just run this price lower here, but we don't have enough information yet. And as a trader, you've got to get used to the fact that we're not going to have all the information. So all we can do is take what we know and then mix in a little bit of what might happen, right? Up, down, sideways. That's why I like to take this time each night in the newsletter, right, to give you that stuff to put together. So the moral of the story is I'm watching this channel, and that will be the area of resistance if we see a relatively big bounce off of this low, right? Does that make sense? Okay, so now back to my chart here now, right? And now you can kind of see, right, where I'm getting this larger channel from, right? You can see that low to low up to that high, right? So there's the top of that channel. The reason why I say this is because if we do reverse tomorrow morning, be very careful buying, chasing the market higher, just because we have, right, that falling resistance there. In all reality, this whole area here could be seen as the battle zone, right? This whole area here could be seen as the sell zone. That's one thing I want to make sure you keep in mind there. Another thing here too is again that prior month open, we're going into the end of the month, and as we get closer to the end of the month, those prior month open, high, low, and close levels, they start to become more important. Now, if we blow through that prior month open, whoa, big move down to that prior month low. It's way too early to call 1309 right now, but I'm telling you, if these bears get a jump on this tomorrow, by the end of the month on Monday afternoon, we might be sitting down at that 1309.3. Again, a little bit of a pipe dream right now, right? Very wishful thinking, right, for the bears right now. But the most important thing is if we do break lower, right, we have to assume as we go into the end of the month, that's going to be a big price magnet. Most important thing right now, we have a rising support trend line. Now, a rising support trend line tells me to add that trend line up to the highs, and that creates what we call a bear flag, right? We talked about this earlier on this week on the newsletter. Bear flags basically tell me I'm looking for a trade short off the high or short off the low, right? Now, what I'm looking for is a sell off the high. This will be usually in the form of a two-legged pullback or a trap high, or maybe if you get lucky, right, it's a buyer failure off of that top of the channel, right? That happens every once in a while too, but usually these are traps. These are short-term buyer failures, right, for a move back down into that range. Now, at that point, you want to see a strong move down. That strong move down will clear the line ahead of us now to sell at resistance. I want to sell that move off of resistance. I don't want to sell into that prior month open. So these are the two patterns I'm looking for when it comes to a bear market with a bull channel, right? Bear market, bull channel. It's not a bull market yet. We haven't seen that strength going higher here, right? It's still a bear market, just we happen to have a bull channel on here. We want to sell the high of that channel, or we get through that channel low, I'm looking for that breakdown below it, right, to be a seller as we go lower. Now, also keep an eye on a trading range here as well. Mark up that low, mark up these highs, right? If we end up going back down to that low again, if I can draw here, right? If we end up going back down to that low now again, right? Be very careful to sell down here. You want to look for one of two patterns, maybe both, who knows? One would be the one above the high. We'll use that 2-try rule, buyer failure. The second one's going to be what I call that fake out, breakout, pullback, right? So it's a buyer failure with a 2-try rule off the high. Again, I know I'm using a bunch of terminology right now that may be foreign to you, but not to worry. Get a much deeper dive. Grab that free trading class in the upper right-hand corner. Look for the information icon, right? And you can see that free trading class. Grab that class, learn the patterns, and this will be a whole lot easier to keep up with me on the nightly newsletter every evening. So, of course, we got that, right? That buyer failure 2-try rule up above, right, above that high. The next one is important. We want to get that moving average down below, right? And then I can sell down below that range with my version of a fake out, breakout, pullback pattern, right, as we try to go lower. So watch that as we go lower here tomorrow, right? If we bounce off of that low, you can already see how they are, right, holding on to that trend line here as we speak right now. Last but not least, if we do make a run lower, right, and we kind of bounce lower there, get through that low, draw that new channel, right? Find that sell up around that high, right? Does that make sense here, right? Kind of talked about that earlier. Okay, so if we don't double bottom and we do keep going lower, don't chase it lower, sell up around that high. All right, guys? Boy, I've covered a lot on this chart. I know. Not to worry. Tomorrow morning, 8 o'clock Eastern time, you and I are going to do it together in our trade room. Grab that free pass on the blog at Sideways Markets, right? Or again, that free course in the upper right-hand corner to learn more. Looking good there, right, on the gold. Now, over to euro. Euro is bearish with a strong spike in channel as sellers try to reach the measured move target in the overnight session this evening. The bears have clear control, so my plan is to look for selling opportunities using resistance levels up overhead tomorrow morning. Now, this is a very similar chart we saw on the gold, right? Here on the euro right now, if I look at a 30-minute chart on the euro, this is pretty much the same thing we saw, right, on the gold, right? We get a big, strong move down. Pardon all the lines on here, right? They're not necessary. Those are the open, high, low, close levels that I use every day for the big picture stuff. The bottom line, though, is bear market. We two-legged pullback, retest that low, right? Oh, sorry about that. We're not double bottoming. Right? We're not double bottoming right there. We can easily see these bears want this. So I'm going to connect those lows up to that high, and this becomes a great spot to look for a bounce, right, off of that low. And what will probably happen is it'll probably end up being a bounce, one try, two try, failure into strength, strength into pullback, right, and pull back down to retest that low, right? It'll look a lot like this pattern right here where it went up, pulled back, bounced, failed, pull back, and gone, right? It happens all the time in these strong trends, so definitely keep your eyes open for that bounce tomorrow here on euro. So as I go back to my chart now, right, here's that new channel, that large channel I talked about. And again, I mean, I'd love to get a chance to sell all the way up top here. I mean, that'd be great, but it's a long ways off right now. So don't hold your breath waiting for that opportunity right now. In the meantime, I just wanted to show you that, kind of to show you kind of the big picture there. In the meantime, though, get a nice strong move down into a spike in channel, right? That channel now is running right into a measured move. Right? So that measured move is a major level of support. I don't want to sell into support. The bears have control. I want to sell at resistance. So where's my levels of resistance? Here's one right there. Here's one right here. Here's one right there, right? Find an area of resistance. In fact, I mean, in all reality, right, this whole thing up here could be your battle zone, right? Just get up around those levels of resistance and then sell it back down. The best opportunity would be a move up above, right, that channel high. Trap high, right, a trap pattern, trap into a buyer failure into seller strength into, of course, seller pullback, right? So again, you're thinking trap high, trap pattern, failure pattern, moving average comes over, right, pullback pattern. Again, deeper dive available. If you want to go deeper into these entry patterns, I'll show you some more examples of them on my free trading course. It's the information icon in the upper right-hand corner, right, of this video. So grab that. Again, you can pause the video. I'll be here when you get back, right? So that's what I'm looking for if the market goes lower. Now, goes higher. What if the market bounces, right, and double bottoms, right? We got a range now. This is all repeating myself, obviously. But again, if we see a double bottom on this chart, that tells you find the highest point between those two, right, and grab it as a range. Once we know we have a range, it's a bear bias going down. Look for what? Look for the buyers to try to reverse the trend, right? Look for those buyers to fail, right? For a failure going back down into that trading range. Or we got that breakout pullback, right? Down through the low, right? Get that moving average through and sell right underneath the low of that range tomorrow. Obviously, the best trade, though, will be off the highs of that range because you're selling at resistance rather than selling at support. What if we keep going lower here tomorrow? What if we keep going lower here? What if this market just keeps on dropping here right now? If it keeps on dropping, well, I have no problem with that, right? I'm going to make sure I keep looking to sell off of that high, right? Keep on selling off of that channel high. If we completely ignore this measured move, remember, what is a support level? A support level is where we anticipate, no guarantee, that buyers and sellers will react. Say it again. A support level is where we anticipate, no guarantees here, that buyers and sellers will react. If we don't see any reaction to that measured move, what does that tell you? There's a bigger move waiting to be had. So what I'll do is I'll take that first leg, I'll wait for the next pullback, we'll look to sell off the high, and we'll use the size of that first leg for our big target down, right? So what will happen is it'll end up being one leg, two legs, and then again, three legs down, right? If we go right through it, I'm going to use this trend line, use that channel, keep selling off that channel, right? Again, with a third leg, right, for our target tomorrow. Okay, so that's how you figure out where that final target is going to be to the downside here for the bears. So now we get a great plan of attack here. But one more thing before we wrap up. How do we reverse? What would a reversal look like? Well, this is where you got to be careful with that resistance level overhead. Because if we see this real strong move up, pull back, now remember, right, that pullback fails, it'll crash back down to that low. But strength, pullback, strength, got to get here in a hurry, right? Got to hurry up and grab that pullback, right, before we get to that hidden level of resistance. Then if we go through it, well, perfect. Then I can buy coming off of that level of support now, right, for the buyers on the opposite side. What I don't want to do, though, is I don't want to try buying into that level of resistance, right? I know it seems like it will be okay, but again, remember, it's a long-term bear trend. We have to expect there are going to be sellers up around that upper level battle zone, so get to those buy opportunities early or wait for it to clear above that high and look for a larger move from there. All right, guys. Boy, I have covered a lot in this nightly newsletter. I'm sure your head is spinning right now with information you don't know about, but not to worry. I've got a free class on my website here at schooloftrade.com. Grab that free class as part of our free trial. As part of our free trial, I'll send you an invite. Come join me on a free pass. I'll teach you all about the patterns we use, and that will make it easier for you to either make a decision to come out and join me as a new client in our trade room, or right to just simply follow along every evening on my nightly newsletter. While you're here on our website, don't forget I have a place for everyone. Whether you're a brand new trader and you want to lay a good foundation to get started, or you want to learn the technical analysis from our intermediate course, or if you're looking for a great trade room and a great community of traders, right, to kick some butt with every day, you don't have to do this alone. Come out and join me as an advanced member and come trade with me every day in that trade room. Don't forget, I'm always here to help. If you have any questions, hit me up on live support, and you can always dial me up. I've got a toll-free number, right? I'm on Skype, I've got email, whatever the most convenient way is for you to reach out and ask for help. I'm standing by to help out. Guys, as always, be well out there. Be nice to each other, will ya? Be here next time. My name is Joseph. Adios, amigos. Bye-bye for now.